Sanjay, how would you approach the banking space? We've been discussing how a lot of these high leverage group of companies or particular stocks have been seeing that deceleration in the past couple of trading sessions. Would you now be worried about taking exposure to even private banks, which might be lenders to a couple of these accounts, and then there is that vulnerability that we could face in 2016 and hence percolate onto the gross NPLs?
My call on the market's direction is more macroeconomic led, and therefore I expect the economic situation to actually give a fillip to the market. Now, if that is going to happen, then I think the primary beneficiaries are going to be those which are in the financial sector and banks particularly. If that is to happen, these misgivings that we have on both private banks now as well as the public sector banks for the last few months are primarily linked to the proportion of non-performing assets that they are going to be accumulating in their books. I think the outlook on that going forward might be a little more positive than it has been retrospective. And therefore, I think, the view has to be positive on the banking sector. And this weakness is probably an opportunity to accumulate. I will not say that, you should go biting into banks as a pack, but I think it surely you should surely nibble and accumulate in this weakness, which in my opinion could be lasting for 3 to 4 months.
Which ones? I mean, would you go with the public sector banks as well? In the private sector banks, would you grade any?
Lata, that would depend as how strong-hearted are you. If you want to take an extreme contrarian call, I would say pick up the public sector banks because the delta there will be higher. If you want to play relatively safe, then the private sector banks are where you should be picking your stocks from.